Good morning, everyone. It's Dan Basse and Ben Buckner back with you on Monday, October 5th. I hope you had a great weekend as you look at opportunities in Chicago. The soybean market's up a couple cents. The corn market's about flat or unchanged. The wheat market's up about a penny. Not a lot of volume or, of course, volatility to start the week. We've traded both sides, and we'll see how things go forward. The market's kind of waiting to see what Secretary Bessent will say on Tuesday relating to, of course, assistance to the soybean farmer. But other than that, it's all about managing risk. You know, if we calculate that the U.S. corn yield is above 182 bushels an acre, soybeans above 52 this year, I think the average farm gate price for the Midwest farmer will be in the 375 or 385 range. The average farm gate price for soybean farmers will be 890 to 930. That should help you think about the future in terms of where to manage risk going forward. Ben, we'll turn it over to you and just take us to where you think the opportunities are. But I still get to this mindset of trying to help the farmer and other traders manage risk aptly in this market that may not show a lot of volatility nearby.
Yeah, I think that's right. And so we think about, we can still debate yields even more intensely because we're not getting USDA reports. The October report will not be released. The time has come and gone to prepare that thing. So that's not going to happen. Criticizing things, but does it help any of us manage this risk? So I think, we take a step back and, one of our hypotheses is, and this period of time is coming, it's just a matter of if we're there already, is, when markets are adequately supplied, we can debate the details of how supplied markets are, but when the kind of low priced, adequate stocks, one of the things that happens is volatility leads. So we can see pretty clearly, and we'll do this work this week in our newsletter, but when stocks to use is high, the volatility is pretty low. So you can throw a lot of things at the market. You can change the perception of supply and demand pretty considerably, and yet you get very little price moves. So I think that's something that's been shown historically when you get to this part of the cycle of the ag markets. You're in pretty sideways trends, and the question that we've got and we'll have to determine is whether that lasts for 6 months, 12 months, 24 months. I think we're just kind of waiting on the next spark. And even in the short term, I think this has been exacerbated by the government shutdown, but neither side has the ammunition they need for that next directional move. So I expect this week, probably barring trade deal chaos or geopolitical moves, this week will look very much like last week. So we're talking about penny moves on a day. Chart patterns probably play an outsized role in daily price discovery. But you can see here, I think we're just going back to that period between 2014 and 2020, the early part of 2020, where I guess we will all debate fair value, but that fair value in the end doesn't change very often. So what is the next supply dislocation is probably the question. Wheat's been here for a couple of months now. The wheat market on balance has done very little. When we take a deeper dive into the global wheat cash market, it jumped out to me on Friday was that on a FOB basis, at least, so excluding freight calculations, all wheat of the major exporters is offered at about the exact same price for the next 2 months. And that's something that we don't really see. Also, the cash wheat market has done virtually nothing for the last quarter. So I think we've kind of arrived at this part of the cycle. So keep that in mind as you see, again, like we've highlighted, recoveries in the market, forward premiums. We'll also continue to estimate yields by state. And one of the highlights has been, of course, acute dryness east of the Mississippi and incredibly low moisture in soybeans recently harvested, single digits. And this is important. And this is all part of the calculation, all part of our balance sheet analysis and ultimately price forecasts. And it's important because I think in Illinois, a lot of delivery locations are set there. So that does bring a lot of importance to the Illinois corn and soybean crops. But just wanted to highlight, when we look farther west, probably a lot of those issues, even disease, dryness, will be avoided in places like Kansas, Nebraska, the Dakotas, the upper Midwest. And so I think we're going to start to see a lot more combine yield reports from those places like South Dakota, Nebraska, and Minnesota. So we just want to keep in mind the entire picture of U.S. productivity. And also pretty supporting to potential crop sizes in South America come January. That is what's next. The growing season has begun in earnest. Argentina's corn crop may be 30% planted in the next 10 days. The Mato Grosso soybean crop is 15% planted today. A year ago, it was virtually unplanted. So at least crop progress wise, we are going to get some amount of soybeans out of Mato Grosso in the month of January. Paraná last week, 26% planted. That's the most soybeans that have been planted in southern Brazil since 2018. So the southern hemisphere growing season has started in earnest. Here we go. And it does look like one of the things I think defining the market this week will be the arrival of the monsoonal pattern in Brazil. It did take a hiatus for a couple of weeks, but now the consistency of the 10-day forecast, so those rains in the extended period have been pulled into 10-day forecast, and all the models are in broad agreement, some wetter than others, but it does start to rain, almost on a daily basis by October 12th, 13th in a lot of Brazil. So looks like nothing terribly remarkable is happening there. They're going to avoid the drought they saw a year ago. So very soon, we're going to be measuring the impact of weather and what does it mean for trend yields in South America, which don't see any real disruptions today, though it is early. So that's, I think, what we're looking at fundamentally. But to your point, a lot of it still is U.S.-Chinese trade, government shutdown, that all lingers in the background.
No, I thought it was a great rundown, Ben. I think you've captured the highlights, which is, unfortunately, we're not looking at markets that are doing a lot, but we are refilling the pipeline. I think that's one thing that's happening in very fast order. And I guess if there is going to be pressure related to harvest, it'll come in the last 33% of harvest, not the first 33. A lot of that crop got delivered on contracts, prior contracts, or is being squirreled away in on-farm storage. I think it's that last part of the crop that really will put some pressure on the market as you think going forward. And of course, important will be whether or not we ever do start selling soybeans to China again. I'm not optimistic because I think the U.S. wants to keep its tariff rate at 55%. That includes fentanyl, and I think that's where Trump and Z are going to have some trouble. Everybody have a good Monday. We'll be back tomorrow. Rallies today are probably not going to carry through, and we will not have crop progress today. So we'll continue to fly in the dark, or the fog, as you will, as we look forward to these grain markets, just lacking U.S. data. Be well, everybody. Bye-bye.